What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is November 16th of 2019. Well, folks, I hope you all are having a fantastic day wherever you are, and I want to start off by saying that I appreciate your patience to no avail, guys. I know I haven't been able to make a video over the last 6 to 7 days. It's been a really hectic week as I've been traveling here to Singapore, but it's been a great time as well. And I actually not only want to spend some time catching up on a variety of topics in relation to the markets, but outside of that as well, give you guys a little perspective as to what I've been up to over the last few days. All right, so we've got a lot of things coming up. It's going to be a long video to say the least, but we'll get right into it right after our quick sponsor. Sponsor for this episode is Exodus.io. Exodus is one of my personal favorite cryptocurrency wallets. Whether it's the ease of use or the clean user interface, the wallet has a lot to offer. It's supported on both desktop and mobile, allowing you to sync your wallet across multiple devices so you can have access to your funds anywhere and at any time. It's also integrated with Trezor hardware wallet, making advanced security easy for everyone. Exodus supports over 100 assets and recently added NANO and Cosmos or Atom. And one of the coolest features is that you can quickly exchange directly from your wallet without ever giving up control of your private keys. Click on the link in the description below to download the Exodus wallet for your desktop and mobile phone. Alrighty, everyone, so let's go ahead, and before we dive into the market, I want to go ahead and give you guys a little perspective as to what I've been up to as I've been traveling. To let you all know, I attended 2 conferences over the last week. I got to attend the Capital, which was a conference hosted by CoinMarketCap, and I got to do a lot of different interviews with industry leaders in the space. Outside of that as well, I also attended a Block Show, which was hosted by Cointelegraph, and I got to meet a lot of exciting people, attend a lot of exciting panels, so it was a really good time. But I want to share some really big highlights with you guys. So there's a lot of different opportunities I've gotten to have in the crypto space, but this probably had to be a top 5 moments that I've had in the space, and that was getting to sit down at the NEO event with not only Dao Hongfei, who is the founder of NEO, a project I've been keeping up with at least since 2016 and 2017, as well as CZ from Binance. And not to mention, it's one thing to be able to kind of sit down and to talk to either one of these gentlemen. I got to do a talk with CZ when I was at the CoinMarketCap conference, as well as do an interview with Da, back a few months ago at Neo DevCon. But it's amazing to have both of them on the stage, and to think that I was able to, help kind of moderate the fireside chat and, provide a little bit of input and, just be there on the stage with them. So it was a really exciting moment. It was definitely surreal, to say the least. And I just want to say that it feels like an honor to be able to do that. Outside of that as well, I had an interview with someone who I've wanted to talk to with forever, and that was Richard Hart. As you guys may know on YouTube, Richard Hart has been in the crypto space for some time. I've been listening to him as far back as 2017, and I was very pleased to see how much Richard and I agreed, because Richard's a very clever and intelligent guy. He's very well-rounded in computer science, finance, human psychology, a lot of different areas that I respect. And, I've always been a fan of his content. He's been one of the few people I can really listen to for like an hour to 2 hours. And he has great people on, so I felt really honored to be on his channel. So if you guys haven't, definitely not only subscribe to him, but check out the video. It was a really good hour-long conversation. So if you're wanting to play some catch-up on what we haven't been able to produce over the last few days, that was a great conversation. So definitely check it out. And there's a lot of other things as well, guys. I mean, it's been great. I got to network with so many people. But in the interest of time, I just want to let you all know that, again, I appreciate your patience, and we've got a lot of things to talk about in the market, all right? So let's go ahead and do what we normally do and start off by taking a look at CoinMarketCap and take a look over the crypto space. So we can see here over the last 24 hours, most cryptocurrencies are to the downside with a relatively neutral trend here. Things have not been, rapidly changing over the last few days. We really just seen a slight decline day by day in Bitcoin's price, and that's been weighing down the overall market here. We can see, as we'll talk about, Bitcoin dominance is really the thing that I want to focus on after we take a look at Bitcoin. But we can see right now we've gone down from about 254 billion at the peak after the 24-hour rally with the China news coming through, and we've seen a bit of a fade off here, mostly coming through Bitcoin. Now, the important thing to take into mind here, again, guys, is, a lot of people at this point, I think, are starting to kind of correct off of the short squeeze, the algorithms that bought into that short squeeze and kind of led to that parabolic 42% run-up. And along with that, really asking the question in this case as to whether or not President Xi's comments are positive for crypto in the long term. And I don't think it's so much a positive catalyst in the sense that it's, China buying up all the Bitcoin or China supporting the development of public chains and censorship-resistant cryptocurrencies. I think more than anything, it pushes the urgency that China is very much close to developing their own national currency in the form of a digital currency that they control. Right. So again, it's not a crypto, but it would be another form of currency that actually controls the ability for people to move money out of the country and making it very difficult, even as it already is difficult within China. Right. Continuing to push the kind of narrative towards digital money rather than cash or liquid currency. So I think this is putting even more pressure on people getting money out of the country, and this will provide some buy-side support for Bitcoin in the long term. We know that a lot of the volume comes out of China, but the one thing I want to mention here, again, as I'll reference to later on, is the shift in dominance in the market. I think that's probably the most interesting thing that's been changing over the last few days. But again, as we talked about back a few weeks ago, we were talking about how we weren't 100% certain the trend had absolutely reversed. We had about a 42% leap up in price in that 24-hour period, but I wanted to see the trend solidify. And I haven't seen that strength show in the indicators just yet. So we can see here between the squeeze momentum indicator, the MACD, the stochastic RSI, things are looking quite weak, right? We've got a fade down again on the MACD where we're seeing the divergence grow again. We have not seen a higher week here on the squeeze momentum indicator, and we also have seen a very weak bump up here and lack of follow through when it comes to the stochastic RSI. All signs to me that, again, we haven't seen the full bottom here just yet. Not in the sense of the market, right? I don't think we're going down to 3K or anything. And again, it doesn't mean I think we're going lower here, but I think that over the next few days and stuff, we could still continue to push sideways, right? We haven't gotten that trend reversal yet in the indicators. And I'm remaining patient on that, guys. That's why I've been really not only eager to push off on buying any extra Bitcoin positions, but I've been averaging in to a few altcoin positions in this case. Now, if we take a look here at the next statistic, and that's going to be Bitcoin dominance, I want to go ahead and, again, talk about why I've been still confident on my position. You know, it was looking in that very short window of time as if a lot of the people who were betting on altcoins were in a bad position here, right? You know, that the altcoin cycle that we were looking forward to had completely faded out, that there was no chance, right? But the one thing I said to remain vigilant on is waiting for that trend confirmation. Just like how I started to get bearish here when I started to see the squeeze momentum indicator setting a lower week, when I saw the divergence starting to decline here on the MACD, and then also the stochastic RSI going lower, right? When I had enough of those indicators signaling that, that's when I got bearish. And I'm going to treat it the exact same way, vice versa, when we start to see these indicators signaling that a bullish reversal is coming through. Well, even with that major rally in Bitcoin's price, that 42% uptick, and that massive leap in dominance of about 2 to 3%, we have faded off those gains over the last 3 weeks. Right? When you take a look here on the daily so you guys can see this, it's just been day by day. We've been seeing a general decline back down to the range we were at before. Now, we still haven't seen a breakdown from the previous low here, and that's when I'm going to look for to really start seeing some kind of parabolic rallies in altcoins from some of the Chinese projects like NEO as well as Qtum, to other projects as well that we've been keeping an eye on, like Chainlink, Ravencoin, and Basic Attention Token. Right, those are kind of the 5 altcoins I've been keeping an eye on, as well as XLM. That's another momentum play I've been looking at. But again, the broader altcoin market in this case is not going to move until we really break down the previous lows. But this is why I said to remain vigilant, guys. I'm sorry, I don't mean to sound I'm speaking a lot today, guys, so I don't want to retake it in this case. But I will say, I don't mean to sound kind of stubborn in that case, but it's the reason why I didn't capitulate in that case. I guess that's a better way to put it. I stuck to my guns. I averaged in even more to my altcoin positions, and I'm up on all of my positions that I've averaged into so far. So it's really good to see, again, that kind of patience and sticking to my guns on how I actually utilize these indicators on the weekly. All right, if we were to take off all the drawings here and just focus on price and take out the indicators, we're setting in lower highs and lower lows. That to me is a sign that we're going to continue declining on Bitcoin dominance, just like how higher highs and higher lows were a sign that we were upticking in the market. Very simple analysis. Stress-free, not to mention as well, we're looking at the longer term time frames and we're trading on these bigger trends. That's at least what I'm doing. I'm not telling you guys you have to do that, and you guys might disagree with me. It's absolutely fine. I would like to hear down below in the description, the comments, if you guys have some methods that you use to analyze markets and maybe have a different perspective. I'm completely open to it. But I just want to share with you guys because I know I've been talking a lot about this over the last few months. And again, it's still what I'm focusing on right now. It's still the biggest thing I think to focus on at the moment for some big trend shifts in the market. Okay? So we'll take a look. One of the plays that, again, I've been holding on to strong, it's my biggest position right now, which is Chainlink, has continued to follow through, setting higher highs in Bitcoin dominance. Now we're testing up towards a consistent resistance range here. I'm interested to see where we'll close by the end of the day. I'd want to see in the next 24 to 48 hours us popping to new highs here, and again, testing back up to this range. But again, this is really exciting to see. We're testing back up to the previous range we had over here in June, and we've just seen the absolute momentum continuing through here across the board. Now, of course, it's important as well if you want to get some metrics on volume. It's important to look at the USD Tether side of things, and Tether volume is pretty consistent across the board. We can see the price here setting higher lows, higher highs, right? We're getting a general kind of ascending wedge here. We're either going to have to see a breakout quite soon, and again, that's why I'm on the 24 to 48 hour window where I want to see something ticking to the upside. If not, we might get a little bit of a correction, maybe to set a low again at 280. But I don't think we're going to see anything severe. I think this has, again, been one of the strongest plays in the market. We've also got Basic Attention Token, which has been acting very similar, right? You can take a look here on Coinbase, seeing that we're setting roughly every week we're going up to higher levels in this case. So really good strength here. I'll take it here, and we'll look at the Bitcoin comparisons, the Bitcoin chart here to actually see how the indicators are looking. Let me get it here on Bittrex so we got the max price action. There we go, right? Again, all of our indicators looking good here across the board. I'll scroll it over here a little bit more so we can see the squeeze momentum indicator. It's a problem with crypto. There's sometimes either an error in price data or the exchange just has a mess up of some sort, and it screws up the indicators and also the price. You guys know, like, there's really tall wicks when a coin gets listed. It's one of the worst things for doing technical analysis. But anyways, you can see here all three indicators still signaling slowly but surely that we're on an uptrend here, right? Even with this crazy sell side candle, we still held the momentum. We recovered quickly. So these are the three indicators I like. If you guys have other indicators, I'd like to hear from you guys, but that's generally what I'm using at the moment. All right, so let's go ahead and take a look at some of the news here. So a little bit of laughable news. The Fed warns in a new report that there could be very well a stablecoin crisis. So I want to go ahead and talk a little bit about this. I'll go ahead and give the quick summary. On Friday, there was a report dropped by the Fed. And in a small section of that report, they talked about a doomsday scenario whereby that, generally speaking, you would have a, you'd have like maybe, let's say, a multi-billion-dollar stablecoin market or some kind of form of an actual well-established stablecoin market from where we are now, which is still very small. And we have this kind of catalyst event where people are withdrawing, and it turns out that there's an aspect of fractional reserves, right? So let's say, for example, there was only $50 for every $100 for the stable coins, a half ratio in this case of actual physical cash in the vault. And the Fed is talking about how this could cause a mass crisis in this case of uncertainty and people losing their wealth. And I find it really, really funny. These terms like fractional reserve or rehypothecation that the Fed is utilizing in this case to criticize stablecoins. It kind of reminds me of a current existing system, and I can't put my tongue on it. I don't know. It's something that sounds extremely familiar to a current existing system in our day-to-day lives where, globally speaking, an average, depending on the country, we have about a 2 to 3% ratio of the cash in bank vaults comparative to the actual amount of currency that people think they own, which is why banks and governments have regulations and oversights to prevent people from having a run on the bank. Did I accidentally kind of expose or kind of dispel the similarities to the Fed's warning? I mean, this is just the kind of fear-mongering. I mean, first off, we had Congress back about, I think it was a few weeks ago, talking about how stable coins are somehow securities, something that's pegged to a dollar, right? And not to mention, bear in mind, these stable coins in this case are backed by a 1-to-1 ratio of actual dollars. If you're talking about the real stable coins like USDC, Paxos, you name it, the real ones, True USD as well. These are highly regulated, highly oversighted. They have audits on a frequent basis. And the Fed is going to sit here and say that this is a valid concern. Now, if they're talking about USD Tether, yeah, I would feel a little bit of concern there. But I actually do believe that Bitfinex and Tether Limited are doing one thing that the banks are doing, and that is matching an absolute, at least value backing behind the amount of Tether created, right? The $4 billion that they have, I have no doubt there is a mixture of different assets, whether that be the cryptocurrencies that are on Bitfinex's exchange, as well as some actual dollars and kind of offshore world of banking that are backing those stable coins. But even that is better in many cases than most banks, even the commercial banks that we trust on a day-to-day basis. And this is again just the hypocrisy, hypocrisy, the hypocrisy here of the Fed even thinking about worrying about this, right? So again, just wanted to have a little bit of rant and rave. I hope you guys appreciated that. And another thing that I just thought was going to be interesting, we've been, one thing I talked about in Vegas, I don't know if I really got to share it with you guys, was that I did a presentation on talking about the evolution of wallets and really a generation of wallets called Wallets 2.0, right? And I think that in the next cycle, I really have a big belief and confidence that we're going to see people becoming their own custodian, and we're going to see wallets with much more functionality. We're already seeing this right now, but it's going to get to a point where wallets will provide a better experience than exchanges in many cases. It's a big belief of mine, and it's a bet I'm making for 2020 and 2021. Well, interestingly enough, one of the players that I've been keeping up with for some time, and we've had here on the channel, we've had Bill Barhydt and his app Abra, and I just wanted to showcase some interesting news. They have over 60 new cryptos they're going to be storing in the wallet, so it's really exciting to see that, again, like exchanges, wallets are starting to provide much more flexibility in the amount of coins that they can store, the amount of coins you can trade, the amount of different features you can have. In the case of Abra, they have synthetic assets, and it's in an actually completely legal and compliant way where you'll be able to actually purchase synthetic stocks, in this case, with Bitcoin, right? You get the price exposure in this case, and it's very fascinating stuff. But again, would recommend you check into Abra if you guys haven't. Just wanted to share it. And also as well, to go back on that topic of stablecoins here, I brought up some slides. Again, if the Fed feels in any way that this is a threat, right? Actually, I'll go ahead and just to kind of signify what I mean here, right? If they think that this very organic chart of growth over time, where there are declines and increases, is a concern, I don't see where the concern is derived from at all, right? And if you take a look at something like Tether, right, this is the old world of stablecoins. I understand to some degree how the Fed could be a little bit concerned when you see the whole supply go down $1 billion in a very short period of time, and then out of nowhere, double in a matter of a couple of months, right? That's where I could see some fear derived. But again, even Tether is a drop in the bucket. It's $4 billion. So again, just want to make a point. Now, taking a look at some of the data science indicators here to close up crypto markets, I want to go ahead and run through 4 indicators, and I'll go ahead and explain these for those who may be seeing it for the first time. This is one of the simple ones that are on lookintobitcoin.com, one of my favorite websites for Bitcoin data science. But as we can see here, this is the 2-year MA multiplier. So it's basically taking the close of price in the market over the last 2 years, so about a little over 730 days, and also taking into mind a 5-year multiple. So that's the red year line here. So it's multiplying that value by 5 times. So again, we can see here, we're riding on the band here, very similar to how we did in the previous run, as well as how we did over here. History repeating itself in various ways. I think we're going to make contact down here with this line. So if we see here, that's around a $7,800 valuation. So we've got a few $100s where we could possibly go down, right? We've seen here in the past that we rode along this line for some time. We kind of bounced off here, and we also saw as well over here we had a bounce off, but rode and continued on the line there, right? So I'm looking for those similarities here. Outside of that as well, the Puel multiple. So this is a really interesting indicator, and I think it plays very much into the economics and the supply and demand side of Bitcoin. And it basically measures the ratio here between the daily coin issuance in USD terms. This is basically the amount of dollars worth of Bitcoin that have been issued on a daily time frame, taking the current market price, right, at the close, and multiplying it by the amount of Bitcoin that were issued that day, and dividing it, in this case, by a 365-day moving average, in this case, of the daily coin issuance, right? So you can see here, at times when the ratio gets extremely low, as we've seen consistently, it's about a 0.3 or 0.3 ratio. When we see the markets find a bottom here, that's when we look, again, for the final bottom in the cycle. We've had that 3 times in the past. In this case, we saw a very similar pullback to what we've seen back in the past here between 2015 and 2016. So again, we're seeing these kind of repeats here. We see usually a rally of some sort as we're exiting out of the accumulation phase towards this 1 to 1.5 area. Again, very interesting to see how we're repeating history to some degree and looking at very simple data science models, right? Not to mention another interesting chart here, the MVRV Z-score, taking market cap minus realized cap. Again, when basically market cap is just taking the supply and multiplying it by the current market price. A very simple indicator. and then minusing that, right, by the realized cap. And the realized cap is taking a look at all the unspent transaction outputs and seeing when that Bitcoin was last spent, okay, and seeing the value of it at that time. We tend to find here that when we get lower and lower here, this is usually when we can get more eager for picking up bottoms on Bitcoin, right? We saw it over here. When we dip below the general green range here, this is when we start to see value in the market. And we can see multiple times in the past, we have a rally here and start to see a big discount as well. This one has been a little more sudden, as we saw. We saw a lot of an increase here comparative also not to mention as well, we have to divide it by the standard deviation market cap. A little bit flustered, guys, because we're talking about a lot of things. But as you can see, are very consistent similarities here, right? Down towards the range we saw back here in 2016 in August, right? Very similar. Again, nothing surprising. And the last one I want to take a look at is the stock to flow model. Probably one of the favorites out there by those who enjoy data science in the crypto space, because again, it plays into the supply and demand economics of Bitcoin, into the predictable inflow of new supply, which again, as we talked about in previous videos, is labeled as deflationary, but as I've kind of reassured in some of the comments for those of you who had responded to my halving video, you're absolutely right, guys. I would not see this as deflationary, right? Bitcoin is inflationary. It increases its supply over time until it reaches that 21 million supply for the coin, but it is disinflationary, right? We're decreasing in this case, right? The amount of inflation on a 4-year cycle for each of the halvings, right? Oh, excuse me, it's not every 4 years, right? But about every 4 years. Now, let's go ahead here. We can see here on the actual chart, we can see that we're around the blue area here. So we're getting to just a few hundred days away from the halving. And this is going to be in May of 2020. If you guys haven't seen that video, it seems like a lot of you have. Definitely go check it out. It's a really valuable one. But we're getting very, very close to it here. And this is why I believe confidently we could get up to around the $100,000 price range next year, not next year, I apologize, in May of 2021, right? This is the general kind of model here. We might see a little bit delayed, we might see a little bit premature, who knows? Again, the $100,000 target is what I'm holding for in the next cycle. That's going to bring Bitcoin to a trillion plus market cap, which is going to be very exciting. All right, so in the sense of traditional markets, we got to have something that's actually going to fuel that Bitcoin rally to some degree, right? The economics and the model have already been built in, right? But there really has to be some fundamental reasons why people are going to continue to buy cryptocurrency assets at these kind of valuations as a form of a hedge. Well, the New York Fed, which supposedly made it seem as if it was nothing, it was a drop in the bucket, its repo operations are continuing to expand. In fact, just on Thursday, they increased it by $104 billion, okay? And this is not the only repo operations they're doing, right? They are not only continuing the repo operations, as they've continued to expand some operations over the next 42 days here. They're doing 2 operations, one with a max size of at least 25 billion and the other with 15 billion. But these are much longer term than the traditional repo operations. So we're seeing that the Fed is intervening in repo markets. It feels that it doesn't have control just yet, and it's having to intervene for a longer period of time. So whereas originally we had kind of the idea that the Fed said this is not a serious alarm, right? There's a little bit of a short squeeze in capital in this case, right? We're seeing maybe a lack of reserve ratios, or maybe, for example, some individual buyer on the market needed cash to meet some kind of obligation. We're now starting to see that the Fed has not given up on this. The total amount of repo operations continues to grow, and it's starting to get to levels and also time periods where this is starting to look like quantitative easing. Just being very clear, guys. Now, I'm not saying that this is a directly bearish thing. If they're going to continue to put the funny money in the economy, printing capital overnight with no one batting an eye, and this capital is likely going to either provide some kind of alleviation for assets, or it's going to be basically the Fed in this case simultaneously purchasing treasuries in a sense, or holding them in the short term, right? That injects cash into the system, and it's likely going to go into assets and other different places. It's going to provide relief in this case, similar to how quantitative easing has done in the past, right? So with more cash in the system, asset prices usually tend to go up. And this is why I really do confidently believe, guys, I think it's the confidence booster for equities to continue climbing higher, right? We're not going to dive too much in equities, but we saw the NASDAQ. To be fair, guys, as much as I've been bearish throughout 2018, we're printing new highs. taking a look at the S&P 500, we're printing new highs. A very strong breakout here. Again, going up to that range we're looking at to hopefully see if we can get the double, or sorry, to get actually towards the specific 50% correction period back down to the previous highs on the S&P 500, which are down here, right? We want to see what would be basically, we're actually pretty much at that range there. So let's go ahead and get the actual printed figure here for the high, right? So around 1580, right? So that would be 30, 36. Wow, I'm like actually blanking on that. No, sorry, 3260 in this case, right? No, 3160. Oh my God, my math is so bad. So 3160, right? We're very close to it. What would be a perfect 50% correction? If we go up a few more points here in the S&P 500, and we actually have to come down and revisit down to this range, again, some people would disagree that we're going to. Then in that case, that would be about the range where we're expecting the perfect 50% correction. Who knows? We might not get that, and markets might continue higher, right? But I can tell you all, I've still been doing better in crypto markets than any other market, which is why I'm not really kind of fretting over this. It's good to see if you guys are positioned in equities, all the best to you in this case. It's awesome to see that equities are climbing higher. And to be fair, as we talked about, the principles are in play. Cash is still available. It's cheap. Interest rates are dropping. We haven't been able to get back to normalized interest rates. The Fed is adding to its balance sheet. It's interacting in repo markets. Should we expect anything else? I personally don't think so. So we'll see here. Maybe it can even break that mold, and maybe we'll have a more parabolic rally here and therefore a more sharper correction than just a standard 50% correction. Or maybe we won't have one at all. It's gotten a little bit ridiculous, but again, we're going to play with the rules here, guys. When cash and inflows are coming in equities, we're not going to doubt it. And crypto in this case as well is still the top play for me personally over the next year or two. So not much has changed in that regard. But want to also take a quick look here for those of you who may be interested. Take a look at gold. Gold has had a nice correction here, right? Our indicator's giving us a good sign here on the weekly. We could see the squeeze momentum indicator, the decline and the divergence on the MACD, giving us those early warning signs. The stochastic RSI dipping here, right? So we're looking for these things to showcase that decline here, and we have seen that, right? So it looks like we're going to likely come down, maybe if we're lucky, to one of these ranges down here, right, where we've had consistent resistance and make it support. That would be really nice. But I don't know if we're really going to get a full correction down to 1360, right? I think that's a little too hopeful. The idea would be probably to hold down here around 1440, 1445, and see the gold miners come down as well. We've got a few plays we're watching, like Ego, again, dropping down here. Would like to see the gold miners like Eagle come down to like 550 like this. Again, some of these previous support and resistance ranges, we've seen that there's some interesting price action here, right? So these are the kind of things that I'm looking for. We can do a deeper analysis on these guys when I do a macro report, probably when I get back home. But for now, I think that's all the talking I'm going to be doing, guys. Definitely was doing a little bit of catch up here just to kind of showcase what I'm watching in the market. Not much, again, has changed. I'm still focusing on more than anything. The most interesting thing right now is the shift in altcoin dominance, right? It's why I'm still positioned the way I am. As much as some of these altcoins look like they may be overextended, that they might be due for a correction, we buy into strength here, at least me personally. And if you guys just want to know where my mind's at, that's where I'm at the moment. Anyways, it's not financial advice. I would like to hear from you guys, though, right? Where you guys have your headspace right now? What are you watching in the market? Feel free to leave a comment. If you like this video, drop a like. Always appreciated. But until the next one, everyone, I will be back home soon. I'm going to be flying out early tomorrow, and I will see you guys when I get back. All right? Have a wonderful day, everyone, and I'll see you all in the next one. Stay tuned.